joining us today in what should be a very interesting panel discussion. We're talking about mining exploration and investment opportunities in Australia. We have a fantastic panel with us today. We've got Hedley Widdup from Line Selection Group, Liam Twigger from PCF Capital Group, Barry Dawes from MP Securities, and Richard Holmes from Oz Minerals. And for those who don't know me, my name is Sophie Spartalis, and I'm the mining analyst at Bank of America in Sydney. We welcome any questions from the forum today. Please, if you have questions, submit them via the chat functionality, and we'll do our best to answer those in today's session as well. So firstly, let's maybe talk about what makes a good exploration story and what makes it a good investment opportunity. Maybe Hedley, do you want to maybe start with that first?
Yeah, sure. Thanks, Sophie. And great to be joining you all. I think the glib answer is a great exploration story that turns into a great investment is someone who finds something. But to be a good investment, there's got to be this transmission to the market, because nobody puts money in just for the charity case of finding something and advancing geology. Investors want the share price to go up. So I think the elements have got to be that it's got some geological credibility and something that can be extended and drilled out and found. So, you know, project under the ground. You can't always be so lucky to know what's going to be there when you just start drilling though. And I think the crucial thing, particularly in a junior company, to be a successful exploration company that goes on to be a great investment, is that you can get that information into the market in a fashion which is regular and interesting and keeps investors along for the ride. And that's one of the biggest failings. So the combination of project and the ability to have that news flow planned, executed, and put into the market. I think they're probably the most important things. Liam's probably got a bit of a view on that as well.
Yeah, no, absolutely. Liam, maybe in your view, what makes an exploration story a good investment opportunity?
Look, thanks, Sophie, and it's great to be on this panel. But I guess adding to that, we had a bunch of exploration properties in the Patterson Range this time last year that we were trying to joint venture or float, and we couldn't get rid of them or shift them for love nor money. Then turn around this time, this year, we had a package of properties, trading on sort of neurology. We put the package together. It was going to go for an IPO. And there's like pulling a fish up from the, the bottom of the sea. We just got it near the surface. Then someone else came along and took it off the hook right at the last minute. And it was a corporate that took a bunch of transactions or a bunch of exploration plays. So timing is so important, and especially in the exploration sector, when we've seen money pile into the producers, cascading down to the developers, and now into the explorers. So I tend to think, while absolutely you need a good value proposition, excellent geological prospectivity, but timing is everything in my view. And at the moment, the market's super hot, and that overlooks some wallpapers over a lot of cracks.
No, absolutely. Timing is everything, whether you're an exploration company or whether you're a producing company. Barry, maybe if we can hear from you, are there any commodities you prefer from an exploration point of view that lends themselves to better or more lucrative opportunities?
Well, thanks for the opportunity, Sophie, of being here today and talking. Look, the easy answer is yes. Gold is the easiest because it's the most, it's a very valuable commodity and something that can be brought into production quite quickly. But we've really got to be looking at copper, and we've got to be looking at nickel and iron ore. We need to look at rare earths and lithium. But as we go through this cycle, and I'm a bull for the economic expansion, and I see a period of prosperity for the next 10 years. That's my view. And I just see that what will happen is it will move from gold and copper and nickel and lithium to a very wide range of resources. We've still got 1,400 million people in China and India, and whatever the fashion is at the moment in terms of those economies and our relations with them. The demand from their middle classes or rising middle classes is just growing. And now that America, and I see America actually joining the growth countries after 30 years of dormancy, they too will be demanding these raw materials. They'll become more and more specialized. So it's just going to be the very, very wide range of commodities, but gold and copper and nickel, lithium are those which I think are there up front here and now.
Yeah, if I can just extend on that, Barry, just for a moment there, you talked about in fashion. You know, there's obviously lead times in regards to exploring and bringing things into production. I guess how much does the in vogue commodity drive where these exploration teams go versus sort of deep fundamental analysis around supply demand dynamics, you know, 10 years out?
Oh, look, I've just seen people who've got projects in all sorts of commodities, and they do a lot of homework on their individual commodities. Gold is easy, as we say, and copper's easy, but you know, when we start looking at rare earths and iron ore and things like this, the lead times are long, but I think that when people actually talk to the end users, which they can nowadays, they can have that longer term view and slowly build their asset base. You know, gold is sort of instantaneous delivery and satisfaction and return for shareholders. But if you sort of take a long-term view, you can get rich slowly and very rich slowly by going into these projects, backing them, and understanding what the end users are doing.
Okay. And Richard, maybe for yourself, are there any commodities that you prefer from an exploration point of view?
Thanks, Sophie. And it's great to be on the panel. Look, I'm probably pretty much aligned with Barry in most of this. So, you know, it's difficult to ignore gold at the moment. You know, the recent price rise has been absolutely fantastic, and it's been a real catalyst to get the exploration industry moving in Australia in these difficult times. If you look at the sort of the long-term fundamentals, you've got you know, we're in a very difficult environment. There's a lot of fiscal stimulus. It's going to take a while for, you know, all this government debt to recover. There's no scenario that you don't really see stronger gold prices. And then look, you've got to back any metal that's going to support the sort of the transition to a low carbon economy. So any metal, you know, copper, nickel, lithium to a degree that you know, supports this transition, I think it's going to have you know pretty strong fundamentals going forward, and probably, you know, modest but sustained price rises. You know, on the flip side, I'm probably a little bit, you know, less bullish on some of the rare earths and some of the more niche metals. I think you'd be looking at, you know, when you look at the markets there, you know, they're opaque. That, you know, from an exploration point of view, finding economic concentrations is really difficult. You've got you know, issues with processing and then marketing. So yeah, stick to gold and and those strong base metals.
Okay, so I guess that's definitely in vogue at the moment. We've seen, you know, exploration can get very crowded, and particularly in some areas here in Australia. The Paterson Range springs to mind. You know, you've got Rio Tinto up there, you've got Fortescue, you've got Newcrest, now IGO have also talked around wanting to start exploring up there and have pegged some ground, all feverishly looking for copper and gold. Can the fact that it is super crowded, dampen the opportunity? Maybe, Barry, do you want to continue on that?
Well, I don't think so. If you like, the Paterson Ranges has been something which has been developing over the last 4 or 5 years. Havieron, of course, has been very, very impressive, and it's helped Newcrest. But that's been underway for a few years. But I think the fact that we've got more money going into the ground and finding whatever is there and giving us a better understanding and coming up with resources, I think that's very, very good. But if we were to look at the Lachlan Fold Belt in New South Wales, we've basically got the same thing. We've got Newcrest and we've got FMG and many other people looking at that. If we go to Victoria, we're seeing a lot of interest in the gold there. If we look at the Yilgarn, there are a lot of old places that are being reviewed with new eyes, and now we've got the Ballina Gold Project in the Pilbara, which is giving a totally different and new view of gold mineralisation in that craton. So I don't see it as being crowded. We've had very, very few IPOs, so there's not a lot of new money going chasing these things. But the fact that we've raised so much money at the small end and the medium end going into exploration and we get results, I don't think it's crowded at all. I think we've still got to keep in mind 68% of Australia is undercover. We've got some new technologies which are allowing us to go under that and see through that. So that's higher risk expenditure, but I think that it's very important, and it will be bringing results. I mean, as we've seen at Malina.
Sophie, do you mind if I make a comment on the crowded and neurology? I think it's an excellent question because often when you get a bit of geological excitement in a region, I mean, the Nova Bollinger discoveries of years ago now that built Sirius and went into IGO, a great example. There's a bubble, if you like, of raisings for exciting exploration plays that go on, and it sees money go into the ground. So I think on one aspect, it's a very positive thing. So this crowding means that there's jostling for position, but there's also jostling for money to find their way into those things, and that makes technical progress and hopefully leads to more discoveries. I guess where the disappointment can come into it, and that might be the downside of the crowding, is that if there's a band of area and there are a few deposits within it, they're not all going to be sitting on one. And just because someone's found one, being right next to them doesn't mean there'll be another one. So it can sometimes lead to, the market can be like a diabetic in that regard, needs the certain hits to keep the system balanced. And if they aren't delivered, then it can often lead to despondency, which pushes the emotion in the other direction. So I think the positivity that we've seen from the Patterson is that we've seen one big company find something, and we've seen Newcrest and Greatland with Javier on. So it's kind of at both ends of the capitalisation spectrum, and there's opportunities for everybody, but there's sniffs across a number of other things too. So it sort of tends to look like that crowding is going to produce more things that will be exciting for the market.
Yeah, absolutely. Liam, did you want to maybe comment on whether you believe that the fact that a super crowded ground can sometimes dampen the opportunity, or do you agree with Hedley and think it can be even more exciting?
Well, I think there's always room for another player. There's always room, and you only have to look at the iron ore market when FMG sort of squeezed their way into a market that no one thought there was room for them. But I guess up in the Patterson range, the only thing to be mindful is where you see these big companies is that a lot of the near surface deposits have been discovered, and exploration is very expensive. And if you're up in the Patterson range, the reason I guess you see the big guys there is because it's quite expensive, and the concept of raising $2 to $5 million for a junior to go up there in a sort of remote area is tough to get a bang for your buck. So you probably need $10 million in your back pocket before you venture up there. Otherwise, you've got to go closer to home, around Kalgoorlie or areas where there's better infrastructure, and you can get a bit better value for money. But no, I always think there's room for someone else, and I don't think it's overcrowded, and it's creates a really good market.
Thanks, Liam. That's a really good segue into maybe the next question. Is exploration can be very exciting, but it can also waste a lot of money. You talked about returns there. So maybe Hedley, at what point do you start losing faith in a company's exploration efforts? What are some signals that we need to look out for?
Well, two things actually that I'm cognizant of when looking at exploration companies and monitoring their progress is that, first of all, a good explorer will never, ever lose faith. So as an investor looking in, you got to look through their positivity and try to find the objectivity behind it. It can be really exciting, but this is the thing. To be a good explorer and a good promoter, you're never, ever going to lose faith in something. So as an investor, you've got to be able to filter some of that out. The other thing which I'm very aware of is that particularly in the exploration phase, if someone is making a discovery, or even when the market starts to warm up, as we've seen this year in gold, where investors will start to value potential rather than just rewarding results, and the value reward perhaps comes a little bit before it's technically confirmed, is that most investors are prepared to pay far more for something that they don't understand than something that they do. And we often see, companies in the development phase, they've got this immense buried value, but it needs to be unlocked by them raising money. But there's this dichotomy between should be worth a lot, but it's not. But then there's explorers which get capitalized at far more and sometimes don't even have a resource. They're sort of trading off of exciting news flow. So those are the things which you sort of have to preface this answer with. And I think that the points at which maybe you don't lose faith, but if there's a discovery which is taking place, great examples. We've got De Grey finding something in the Pilbara at the moment. And I don't want to make a specific example of when you should be buying or selling them, but all companies reach a point where they go, we've put a ring around this, we're now going to put a resource out and start an assessment. And the news flow shifts from this is getting bigger and bigger to here's how big it is, and we're going to look at how hard it's going to be to roll out a development on this. And that's where there's usually a shift in sentiment in the market. So that's the first part of my answer, is that you might not lose faith at that point, but you might be cognizant that the range of buyers might change from people who are speculating on bigger and bigger size to people who are more interested in the value, and they'll be far more patient as buyers and sit on the ask rather than necessarily hitting every bid. But then in some markets, you've got tremendous excitement going into things that just have potential. And I think they're probably the ones where this answer is most pertinent to, which is that, for someone to have a great model, that's very exciting. But the whole nature of exploration is that it's a deeply scientific and iterative approach where you need to gather information, improve your model, and then go and test the next thing. And that often doesn't sort of mesh with the expectations of the investment market. I suppose when you see someone come to market with something where it's a great target, we're raising money to go and drill it. I've seen a number of those where the money gets raised and a couple of holes go in and don't find anything, and then everybody wonders what to do. So I guess that's often the trick, is that it's hard to see through just how confident someone can be in a drill target. Easy for a couple of holes to supposedly kill something and to accidentally lose faith at that point. But I just make the point off the end of it that, and I was reminded of this by a mining engineer who's got quite a high profile in the market, has been involved in building many, many companies. And I had glibly said, you could make this target work with 5 drill holes. And he challenged me and he said, the average number of holes taken before you get a discovery on any project worldwide is 17. Now, I don't know, Richard probably knows this far better than I do, but I don't know where 17 came from. I think he was making it up because it was at least 3 times the number of holes that I was proposing. But, the first hole isn't going to find it. If the first hole does find it, they've probably just been really, really lucky rather than scientifically brilliant, or it's something that's had a problem and it's been locked up for ages. So I think you've got to have measured faith with these things. Don't lose faith until you've seen at least a few holes go into it. But build your expectation at the start as to why it is that you're going into it as well. So if you're buying an explorer because you think they've got a ripping story that's going to, produce some exciting news from a discovery, you might have to measure your expectation on the first set of results and then the second set of results. And if it goes too long after that, then that's when you need to start looking to determine whether they're actually going to find something or not. First set of drill holes might not, but if they're promising the market that it will, then you've kind of got to question whether they were being honest or whether you're being honest with yourself.
Thank you for a fantastic and comprehensive answer, Hedley. Liam, do you have any follow-up questions, or Richard?
If I can, sorry, you go, Richard. You go, mate.
I'll just comment on Hedley's 17 drill holes. I'm not sure it's quite 17, but I would certainly be, be very wary. Once you've seen the first program, once you've seen the second program, if you're not hitting mineralized intercepts in your first program, you got to really consider why are you there? Hedley made good comments about the target. Once the model's been tested, you've really got to think, why am I there? Why is the company there? And often you'll see people trying to eke out every opportunity of a project, constant changing of models, and I think that's usually a sign that they lost faith. They're not quite sure where to go next, and it's time to bail.
Richard, I think I think you'd be well aware of the how influenced averages are by extreme numbers, and I wonder if that number 17 actually jumped up. Kirkland would have taken thousands of holes to discover Swan on the basis that they were mining it for about 20 years before they actually found anything under Fosterville. So maybe the real number is a bit lower than that, but yeah.
Let's see. So Liam, maybe let's move on. In terms of over the last few years, I guess one of the big thematics that we've seen across the mining sector is a number of farming agreements and JVs between the small and big end of town. I guess as an investor, is there an opportunity for you to capitalise in these very early stories? And maybe can you give us some examples of maybe where you've had this opportunity?
Look, some have gone better than others. From my perspective, in terms of entering into a joint venture, if you're a junior company, I mean, the drivers for that would be that the capital required to progress the project is too large, or the risk is too great, because otherwise you're really giving away a fair chunk of the potential to someone else, and that other person might also have their foot on your throat. So it wouldn't be something that you'd necessarily go into, but there's been some great successes. I mean, if you look at Gold Road, and they were developing Gruyere, they had the funding to go 100% themselves, and then they cut that joint venture with Goldfields, and that's been a magnificent outcome for everyone. And at the time, people were saying, oh, why wouldn't you do it yourself? You know, why did you cut Goldfields in? And then sort of straight after that, we saw half a dozen juniors try and do the self-development and go bust. So that was a brilliant outcome. It sort of set up Gold Road nicely for the future. And the other one up in the Patterson Range with Greatland and Newcrest, you know, fabulous part of the world, very expensive part to undertake exploration, and having a world-class partner such as Newcrest, it's fantastic. And then you've got Rio and Antipa up there, and I think Antipa's, you know, just starting to get some value and to reflect, you know, some of the benefits from that arrangement. But I'm not necessarily a fan off the bat, and I guess we saw joint ventures done and IPOs done with a major investor because people couldn't raise money recently, or up until recently. Now the market's turned, and I think I try and go my own way as much as you can before you give away potentially the lion's share, a lot of the upside. So some of the models work, some better than others, and I guess we're seeing with Richard can talk to Oz Minerals and with Cassini, with that joint venture, which I think has worked pretty well, and now they've moved to a takeover. And that's the challenge, I guess, if you're a junior, you cut in a major, they spend money, or you spend money, run the program, and then it's very easy to come over the top. So it's a sort of a double-edged sword, and wouldn't be something that I'd necessarily be my first choice. But if the project the capital is so large, or the risk so great, it's excellent to have a partner. But it's just trying to make sure, how do my shareholders get that return?
Richard, I guess Oz Minerals, this has been a very clear strategy from the moment your CEO, Andrew Cole, walked through the door, is to sign as many of these sort of farming agreements or early stage JVs. I guess, can you maybe talk about that at Oz Minerals?
Yeah, absolutely. I mean, the JV models work, you know, fantastically well for Oz Minerals. I also think it's worked well for our partners. I mean, we've gone through, you know, some fairly difficult times in the last 5 years. And as Liam says, sometimes it's because there's just a lack of capital, and we have the ability to provide capital to juniors. You know, in challenging times, a JV means, you know, you've got to weigh up dilution at a project level versus dilution at an equity level. And, you know, there's always pluses and minuses to both scenarios. So I think the model we've used has been pretty successful, and I think our partnerships that we've had have been the classic win-win. And you know, we've progressed projects. Obviously, with Cassini, we've gone much further, and yeah, ended up in a situation where we made a takeover offer. So I think at the right time they work for both parties, and it's a model that we're in great favour of.
I might stay with you, Richard, just for a moment. Can you maybe talk more broadly around where Oz Minerals is exploring in Australia today? Obviously, you've got Prominent Hill, you've got Carrapateena, we've spoken about Cassini and West Musgrave, but I guess, one, where are you exploring and what's attracted you to that area?
So I think if you look at where we are in Australia, we're essentially in 4 provinces. So we're in West Musgrave, you know, we're in the South Australian, you know, the Gawler Craton, either the, you know, Mount Woods province or the Stuart Shelf, and then over in Mount Isa. So, you know, what attracts us to these areas? These are, you know, recognised geological terrains with significant endowment, you know, ore body types that tend to be higher grade, and can be brought on to production, in a relatively short time scale, and for relatively low capital. Look, the reason we take this province approach is that we want to be in these areas for 20, 30 years, and when you've got those opportunities, you can build scale, you can leverage your infrastructure and your IP, and you can really create long-term value for all your stakeholders, all the way through from shareholders, local community, government, employees. So it's it's a little bit of a different model, but I think it's been the real key to our success, and it's a real driver of future growth.
Okay, excellent. Barry, maybe one for you. When you're looking at a company and where they're exploring, I guess, how important is the address and neighbouring success? We spoke about this earlier in our discussion today in regards to the different belts. But I guess, what are the top 3 things that you would look for or look for more in a story?
Look, I have to start with the regional geology and the geological structure. And there are so many opportunities right throughout Australia where individual companies are focused on one particular part of a regional structure or a craton. So just following that through and understanding the geology as best you can. So that's really, really important to me. And then we can follow up with geophysics and geochem, which can reinforce the understanding and bring up the anomalies that might lead to mineralization that could be economic. But and then we've really got to look at management and how they really run it. I'm not interested in going into a region just because it's popular. I want to go there because I think that geologically there is a valuable asset that will be determined by whatever technical tools the team puts together. And there are so many regions right throughout the country that I mentioned earlier, and I often see that there's one or maybe even 2 companies which are there by themselves leading, and if the geology stacks up, it makes a lot of sense for me to back it, and it's been quite successful taking that approach.
Okay, and we've got a question from the floor, and thank you for submitting the question. Just in regards to mineral exploration in Australia, rose 12% last quarter. Do you feel as though that there is a particular sector that's driving this? And I guess, firstly, do you believe that the trend will continue? And secondly, do you believe that if that trend is going to continue, which sector, ex gold, will drive that?
Well, I think it's probably copper. That's the next easiest product to produce, and when we start looking at porphyry coppers, that becomes fairly expensive. Deep drilling, so that takes a lot of the dollars in drilling. But nickel is very, very important as well. But as I said earlier, I just see the exploration dollars rising. Gold has been very strong, as you know. We're doing about $1.2 billion annualized now at record levels. I just see it spreading right throughout the range of minerals right across the country.
Okay, Hedley, do you have any comments there, and just in regards to where you believe which sector, which commodity you think may drive the current trend on exploration?
Yeah, I know there was a caveat there on ex-gold, but I think so much of the excitement right now has been driven by gold. So 12% jump, I don't know what portion of that would have been driven by people being excited about gold and investing in something that then goes and looks for it. Probably a lot. There is exploration occurring across the board, but if you look at that trend over a longer period of time, the exploration spend tends to correlate with, reasonably well with meters drilled in Australia, and that seems to match the cycles that we go through from bust to boom, and we're in an uptrend at the moment. So yeah, I see that going on. I agree with Barry's comment that it'll spread across the rest of the market because for people to put money into exploration ventures, that means they're prepared to take a risk on something within the minerals area. Now, you can take a risk on something in pharmaceuticals, you can take a risk on something in cannabis, you can take a risk on many, many investment things, but exploration is the one which occurs in our sector. That the money is flooding in from the equity market now tends to make me think that quite a few other commodity areas will benefit from that. I agree with your comment, Barry. Copper is a likely one. I think there's probably some excitement in nickel, although the commodity's probably not setting the world on fire. There's been some reasonable progression towards discoveries, and nickel has often been a sort of thing which can be easily developed in places like Western Australia as well. So I could see those things generating enough excitement too.
Yeah, and if I could just say, look, we've had a drought of capital for the exploration sector that goes back 12 years since pre-GFC. So what we're seeing now is huge catch up, and the fact that we've raised so much money in so many different companies, I think we're going to see some outstanding results over the next 12 months.
Hopefully, Barry. Maybe that's a good segue into our final question in regards to where do we believe is the best mining exploration and investment opportunities in Australia today. We've obviously talked to a lot of examples through our discussion today, but maybe, let's go around the panel. If you could maybe highlight which ones you believe are the best mining exploration investment opportunities, and then also, most importantly, how we could best capitalise on it. And maybe, Richard, we'll start with you.
Okay, pretty difficult for me to name names given what I do. But my suggestion will be, it comes down to some pretty simple fundamentals. Back a management team. If you look around at the 3 or 4 discoveries that we've had in Australia in the last 12 months, be they in WA or Victoria, and you look at the people behind that, it's management with a track record in exploration, good technical people, and who've been in the game for a long time and have delivered. So yeah, first and foremost, look for the management team. And then choose your commodity wisely. So gold is obviously up there, and base metals, because you want to ride some of this euphoria, but you also want those people with the track record to actually have the capital to deliver. So that record gives them ability to raise the money, put the dollars in the ground, and hopefully get success.
Okay, thank you. And Barry, we can hear from you again in regards to what you believe is the best opportunity today.
Well, I think that we've sort of talked about the Malina Gold project of the Grey in the Pilbara. I think that's quite outstanding, primarily because it's 150 kilometres of strike and essentially mineralisation all the way along that. So there's going to be a lot of activity there for a long time, and there's going to be a lot of Me Tooism. So that's exciting. I think the whole Boulder-Lefroy shear, going up from well north of Paddington right down to Norseman, looks pretty exciting to me. I think there's still big companies doing work there, Northern Star and Goldfields and some other ones around. I think that's very, very exciting. I think Victoria in the Bendigo zone is exciting for Chalice and Kalamazoo and Catalyst, as well as Kirkland Lake and in the Stalled zone, that's getting a bit of excitement underway there. We hope they're successful. Different style of mineralisation. I think New South Wales in the Lachlan Fold Belt is pretty exciting. I think Gawler Creighton in South Australia and things gold and copper there are exciting. So it's just everywhere for me. Up around Cloncurry. And now that we've got some money, I think we're going to see a lot more results coming through. People have got some great ideas, and there's really good exploration potential out in those areas.
So lots of opportunities. That's excellent to hear. Liam, what about yourself?
Thanks, Sophie. I mean, I'd like to touch on M&A if we get a moment shortly. But in terms of the best areas, I like the Laverton, Leonora region of WA, and I like the juniors have all had a nice uplift there. And when they're raising money and looking for deposits or discoveries, you don't need 1 million or 2 million ounces. You know, elsewhere, if you're going to come up with a discovery, you've got to have critical mass because it's got to support its own infrastructure. But around where there's existing big players, you might only come up with 250,000 ounces or 500,000 ounces. And there's still value in that where you can toll treat or deal to a major. So in terms of managing your risk, it's a way, well, hopefully we come up with a world-class discovery, a major deposit, but even if we only get halfway there, there's still value in my share price because I can deal these ounces. So there's been an uplift in a lot of the juniors that have got a modest resource in the market, and I think that's a good thing. And it helps investors, hedge their risk so they don't lose everything. So, but I'm a true believer in Laverton.
Excellent. And Hedley, what about yourself? No one's spoken about the Tanami so far. Maybe you can talk about that. But do you have any other sort of key areas that you're looking at the moment and good opportunities for people to capitalise on?
Well, I mean, Barry didn't leave anywhere in Australia for me to talk about, but there's 3 areas that I quite like, which are a combination of they're seeing funding, company doesn't need to convince the world that it's a good place to look, and they're having some form of success. So I think what De Grey has done in the Pilbara is tremendously significant because it has shown that there are large gold deposits potentially formed there. Now, there's a lot of geology to be strung around that, but I think it's a fantastic new model, which has actually disproven what a lot of naysayers would have said in the past. And I was one of them, so I congratulate those guys. I think they've done a wonderful job. And there will be other opportunities to find gold systems there. I think that proves it. So I think it's worthwhile people having a look over that again. Not for watermelon-shaped nuggets, much more for, actual baseload deposits, which are in the hard rock. Second one, which I really quite like the idea of, is Queensland, which has been overlooked to a great extent by what's sort of swept through the market in the last 12 months or so. I think there are a lot of opportunities in Queensland, which are probably for people to, find something in a mineral district that has been poorly done in the past. And actually, you might not have to find anything. It might just be spotting the opportunity and pulling together a good play, which mates processing with mineralisation. And then the third one is Victoria. Victoria has been well known as being a tough place to find gold and then to commercialise it. And we had an extraordinarily poor patch which ended in the early noughties off the back of 2 projects which were going to be great big new gold players and turned into nothing or very small ones. So that sort of put Victoria on a bit of a blacklist, I suppose you'd say. Kirkland Lake has put Victoria back on the map with a stunning discovery at Fosterville, which I don't want to downplay. I don't want to paint in any light as being an easy discovery for anyone to make, but it has drawn exploration dollars to Victoria, and it has shown that discoveries can be made. The more money that is spent will give exploration discoveries a better chance. So I'm quite a fan of what could happen in Victoria there. What I'm cognizant of is that Victoria, when it comes to permitting, is quite capable of scoring own goals. And it's for Victoria now to snatch victory from the jaws of defeat as far as making sure that new projects can be developed in this state sensibly. So they're my 3 thoughts.
Very patriotic there, Hedley. I just got one final one for Richard. Just in regards to top-down versus bottom-up exploration budgets, I've noticed the companies that I cover, certainly it looks like in some areas it's more of a down approach. Can you maybe talk about just very quickly at Oz Minerals sort of what approach you take there, or is it a combination of?
Combination of. Easy answer to a long question.
Okay. It's definitely been an emerging thematic, definitely that I've noticed coming through reporting season, and as we hear the FY21 budgets get set. So interesting. All right, well, I think time is certainly drawing upon us. So with that, I'd like to thank the panel. Thank you, Hedley. Thank you, Liam, Barry, Richard, for your exciting insights. I've certainly learnt a lot. I hope the audience has also learnt a lot. And if there are any other follow-up questions, please do let us know. But thank you again for joining us, and have a good day.
Thanks, Sophie. Thanks, everybody else.
Thanks,
well
Sophie.
done.
Yeah, well done. Thanks, everyone.